Hey, you. South Korea just speed ran an entire financial crisis side quest in 9 weeks. On July 29th, the country's finance minister stood inside parliament and apologized to the entire nation for a financial product his own government had approved less than 3 months earlier. The apology did not come from some crypto founder filming a Notes app confession from Dubai. It came from the actual man responsible for the country's finances. On that same day, the Korean stock market dropped 12.6% in a single session. People opened their brokerage apps in the morning and received a complimentary digital lobotomy. The product involved had been marketed to normal investors as a way to make bigger gains. Naturally, it ended with the government saying sorry, while everybody's portfolio looked like it had been hit by a ballistic missile. The story starts during the fun part, when every investor in Korea believed he had been personally selected by God to become rich. For most of the year, South Korea had the best performing stock market on Earth. The Kospi had risen 122% since January and reached an all-time high of 9,386 in June. An entire national stock market more than doubled in 7 months. People were probably opening investing accounts after watching 17 seconds of a TikTok edit with funk music and a Lamborghini. The explanation sounded reasonable. Korea makes memory chips. Memory chips are essential for AI servers. Every technology company is currently constructing AI infrastructure as though the machines will execute them if they stop. That story contained plenty of truth, which is exactly why so many people got comfortable. Samsung, Electronics, and SK Hynix made up close to half of the entire Kospi. 2 companies were carrying almost half the national index, while thousands of other listed companies stood nearby like background NPCs. Buying the Kospi had basically become buying Samsung and SK Hynix through an unnecessarily elaborate menu screen. The concentration already made the market fragile. Korean regulators then added leverage, because apparently the normal version of gambling was no longer creating enough content. On May 27th, regulators approved single-stock leveraged exchange-traded funds. These funds take the daily move of one individual stock and multiply it. There is no diversified basket cushioning the impact. You select one company, increase the sensitivity, and pray that the stock never experiences an emotion. It is investing with the difficulty setting changed to hard mode with no save file. Korean retail investors responded with the restraint and emotional stability expected from people who had just watched an index rise 122%. They poured 14 trillion won into these products, equal to roughly 9.7 billion US dollars. Foreign investors put in around 2 trillion won during the same period. Regular people invested about 7 times more than the professionals. The professionals looked at the product, took a small bite, and put the fork down. Retail investors swallowed the plate, ate the table, and asked whether margin was available. Most of that money was concentrated in leveraged products connected to the same chip companies already dominating the index. Everybody had crowded onto the same trade while pretending the room still had emergency exits. Then July 29th arrived. SK Hynix announced record earnings, the strongest results in the company's history. Investors had spent months saying earnings would prove the AI chip story was real. The company delivered exactly that, and the stock immediately fell almost 20%. Samsung dropped as much as 14%. Since those 2 companies controlled so much of the index, the Kospi collapsed 12.6% in one day. SK Hynix pulled up with record profits, and the market responded like a 17-year-old receiving socks on Christmas. The earnings were excellent. The positioning had become completely unhinged. Too many investors already owned the same trade. Many had added leverage. Once prices started falling, forced selling accelerated the decline and fresh buyers were nowhere to be found. Every degen had already boarded the rocket, so there was nobody left at the station to purchase their bags. Leverage did not invent the weakness. It took a crowded trade and strapped it to a stolen Dodge Hellcat. A normal decline became a liquidation montage. Later that afternoon, a lawmaker asked Finance Minister Koo Yoon-kil to apologize for introducing the leveraged products. He agreed and said he was sorry they had been introduced without careful consideration. Government officials usually communicate with language designed to sedate an elephant, so this translates roughly to, "We may have accidentally let retail investors deep fry their life savings." The chairman of the Financial Services Commission apologized as well, saying that as the authority responsible for financial markets, they felt sorry for falling short. Calling this falling short feels generous. The market had just fallen through 6 floors, clipped the parking garage, and continued toward the center of the earth. 9 weeks separated the product's approval from the national apology. Some people spend longer deciding whether to return a shirt. Regulators are now considering restricting access so that only professional investors can purchase these funds. The timing has immaculate comedy. The product was introduced so ordinary investors could access sophisticated trading strategies. After ordinary investors placed 14 trillion won into it and got publicly folded, the government discovered that sophisticated products may require sophisticated users. Foreign professionals invested 2 trillion won. Retail investors invested 14. The people who were supposedly being empowered became exit liquidity with a national identification number. Volatility has remained absurd. During one recent session, the Kospi surged 18%. The following session, it lost 5%. Markets behaving normally do not bounce around like a crypto coin launched by a TikTok influencer named Wealth Grindset CO. The index remains roughly 1/3 below its June peak. South Korea is the setting of this story, although the lesson applies far beyond Korea. The 7 largest companies in the S&P 500 now account for somewhere around 1/3 of the entire index. America has not reached Korea's level of concentration, although the direction of travel should make investors slightly less comfortable than they currently appear. Those companies grew so large because investors share one dominant belief: AI will create enormous profits, reshape the economy, and justify historic amounts of spending. The belief may be correct. The problem begins when everybody owns the same winners, expects the same future, and treats every dip as a government-mandated buying opportunity. Markets become vulnerable when millions of investors share the same thesis and express it through the same small group of companies. Add leverage, and the trade begins carrying enough gasoline to qualify as public infrastructure. Nobody can know whether the S&P 500 will suddenly drop 12% in one day. Anyone claiming certainty probably has a paid Discord, a rented McLaren, and several unresolved securities violations. South Korea still provided a useful live demonstration. A concentrated market combined with leverage and a universally accepted narrative can collapse without the underlying business story becoming false. SK Hynix did not reveal accounting fraud. It did not miss earnings. It reported the best results in company history and still lost almost 20%. The company performed well. The stock had already absorbed an insane amount of optimism from investors who arrived earlier. Being correct about a business does not guarantee that buying its stock will make you money. You can correctly predict the future and still get financially neutered because everybody else predicted it first, paid too much, and borrowed money to do it. That is the lesson Korea just purchased for 14 trillion won, and you received it for free while sitting on the toilet. Subscribe, because I will keep watching this market until regulators approve a 5x leveraged Jensen Huang leather jacket ETF. Now please leave before somebody securitizes your aura.